Good morning, everyone. John Hutchinson and Jeff Wood, Traders Reserve's Breakfast Club, Wednesday, October 29. Uh, got a lot to share, but we'll try to keep it simple and down to our usual 30 minutes. Give me just a second to get everything organized on the screens, and we should be ready to go. Uh, First of all, the Happy Wheel Halloween edition. 2 days to get the candy bags filled and get ready for the onslaught, at least in our neighborhood. My wife Liz has been working on the house for uh, man since Labor Day. I think she's starting a little early, but that's the current uh, display on the Hutchinson lawn. She really loves Halloween more than Christmas, but the real monsters are over here in the doorway, right there. Those are our two little dogs that bark at everything that walks by. They were barking at me when I was taking that picture. So anyway, hope everyone enjoys their Halloween. Hope you have great weather Friday and a good neighborhood turnout. We're certainly expecting about 150 kids this year.
Is that a
Uh,
foot that the skeletons are hauling away? Some bodies and a foot is rolling out. Is that what that
yep,
is?
yep, yep. All the dead things, right? And I
That's
couldn't get it
awesome.
in the picture, but Liz put together these flamingos with skeletons riding them.
Yeah, yeah, I
And I'm like,
love it.
how does a flamingo have anything to do with Halloween? She says, I don't know, but I like the flamingos. I'm okay.
You can find a way to make anything Halloween.
So yeah, there's more to the left side, more to the right side, but I just couldn't get it all in one picture. So anyway, speaking of scary news, today is Fed decision day, and we already know the Fed's expected to cut by a quarter point. That's pretty much priced into the market. The most important thing coming out of today is the forward looking or forward guidance from the Fed and the whether or not the Fed makes any change to that statement. If they don't make any change, if they are consistent with the statement they put out in September, then Wall Street will expect that the rate cutting cycle will continue into December and on into 2026, and that will be a small tailwind to the markets. I mean, it may be a bigger tailwind, but I think the really bigger tailwind that is just starting to get a little bit of play. I heard about this yesterday and shared it in the chat in the AI2 Insiders room. Um, but that is that the Fed may be considering ending quantitative tightening. That's QT. That's a program the Fed began back when inflation went out of control. And essentially, what the Fed does is they stop reinvesting money in bonds. They stop buying bonds, basically, and in an effort to decrease the Fed's balance sheet. Well, if the Fed ends that program, that increases liquidity in the bond markets. That is a positive for stocks. That essentially it's a way to increase the money supply. Uh, Whether or not that has a positive or negative impact to inflation would remain to be seen. That would be a big question. If you increase the money supply, you increase the risk of inflation. That would be a bad thing, but that's well into the future. So uh, I don't expect any major surprises outside of that quantitative tightening ending. If they did that, that would be a dovish surprise, and I do think that the market would move quite positively. You might see a 1 or 2% move over today, between today, tomorrow, or between today, tomorrow, and Friday. So uh, we will be watching that. What I have been paying attention to, though, is a divergent rally. And this more or less dates back to late last week when the major indexes started to move following a couple of days of blah. But you can see on the four charts here, Nasdaq up very strong yesterday, S&P up strong yesterday, well up yesterday, not hugely up, but that's on the back of Monday's one greater than 1% rally in those two indices. Dow was up, but the Russell was not, and the Russell was down on Monday as well. So the these two things, these two issues, the Fed and the this divergent rally, are connected. If the Fed implies continued or ongoing rate cuts, that will have a positive impact for small cap stocks. And if the Fed also is ending the QT program, that also should flow into the Russell, into small caps, as that creates more liquidity. Think of it as borrowing, the ability to borrow money at lower rates. You put those two things together, that has a growth track for small cap stocks. So if all of those things happen, I'm not predicting that the Fed will end QT. It may be something, it may be, they may be at the point where they announce that they're considering ending QT, which the market would still move higher. But those would be positive developments for small cap stocks. Remember that for most of this year, small caps were lagging badly. And it wasn't until the summer months that small caps started to participate in the rally. It's like they were, somebody gave the small cap stocks a dunce cap and stuck them in the corner. But finally started to unwind in the or take part in the rally in the latter stages of this summer months. So, um, excuse me. Big earnings week. Most of you probably already know this, but today we have after the market close, Microsoft, the two Googles, that's GOOG and GOOGL, Meta, Facebook, ServiceNow, and KLA 10 Core. Watch KLAC, KLA 10 Core. They're in the chip sector, stock that I really liked a number of years ago, traded in and around it. Um, and I think that stock blew up, not in a bad way, but like went parabolic. Anyway, um, Thursday we have Apple and Amazon before the market opens. So really, five major announcements coming between the end of the day today and the beginning of the day tomorrow. If those are all positive developments, and I expect Apple will post a pretty sizable beat on the back of positive news surrounding sales of the iPhone 17. At some point, they got to come up with something, some other nomenclature for that. Stop calling it numbers. But anyway, sales were robust for Apple for the iPhone 17, as well for their new M4, M5 chip powered MacBooks. So I expect Apple to, post a pretty sizable beat, but we'll see. Uh, I think Microsoft is also going to post a sizable beat. So hopefully folks don't have bear call spreads. And let's see, Monday, Palantir, that will be widely watched. I did see news that Kathy Wood of ARK Investments, the ARK ETF or hedge fund, dropped shares of Palantir. So a development that bears watching. If she either reduced her exposure or eliminated her exposure, that would tell me that Kathy agrees with me that Palantir is way overvalued and that their earnings expectations are not realistic given current market conditions. But we'll see. For those of us in following the AI2 insiders, some things that can have impact on us. AMD reports on Tuesday. Excuse me, that can have some downwind effect on the other chip stocks that we have in the November momentum portfolio as well. Shopify, Lumentum, both report on Tuesday, and Coherent, COHR, reports on Wednesday. For those of you in the September stocks from the AI2 summit, uh, Arista Networks will report on Tuesday, so that will have an impact, may have an impact uh, on that stock. Although we'll cover what to do with that portfolio during tomorrow's happy hour event. That'll be 4 o'clock here in the Breakfast Club room. Lots of big announcements, all good stuff. So don't miss it. Uh, just really excited about things that are happening and underway, and a chance to share them before the holidays get underway. So today in AI, big announcement from NVIDIA. Actually, it was like 19 announcements in one. So $500 billion in AI chip bookings. That's a positive development. Seven supercomputers for the Department of Energy. Huge partnership with Nokia or Nokia. Actually, what that is, that's like a sentence. What kind of car do you drive? Nokia. Um, the more tech and pharma collaborations, et cetera. You can see everything listed here. Just like a data dump of announcements around centered in and around AI for NVIDIA today. Should pre-market stock was up 3%. So I expect that that will, uh, on the back of everything taking place today, I think that that will be a pretty strong development for NVIDIA. Remember that NVIDIA reports earnings on November 19th. So for those of you in AI2 insiders, I am going to raise the target on NVIDIA. It's NVIDIA. Every catalyst affects the price positively. So I'm going to move our target higher from where we currently are. I'll send that alert out about 9 a.m. today, uh, moving it up a sizable amount to account for the next earnings cycle that Nokia, NVIDIA is expected to report on the 19th. And finally, today in AI e-commerce, an announcement today of a partnership between PayPal and OpenAI. Um, the combination of AI and e-commerce is not something that I've fully wrapped my head around because I'm not yet clear on how it impacts e-commerce. What's the positive, uh, momentum driver in terms of the overall global ecosystem of e-commerce? But what this tells me is that there is another iteration of artificial intelligence that's yet to come, which is in the e-commerce and shopping space. How that transpires, I'm not, like I said, I'm not clear. I mean, you can search for pretty much anything, so I'm not clear on what the difference is between AI and current searching capabilities. This is a little bit, this is not unlike the way that I was skeptical about AI, artificial intelligence, back in 2020, 2021, 2022. Um, it took a little while to get over that skepticism and really wrap my head around how AI had the potential in the AI2 sphere to really grow. But as it stands, payment systems connecting to AI tells me that there's a future that is planned, that is retail or shopping based, and that could have a very significant impact. But I want to know what it's like. What's the difference, right? It's like you're looking at a 2025 versus a 2026 Nissan, and you want to know what's the difference. It's kind of similar to that. So, with that, Jeff, do you have stuff that you want to share today too?
Yeah, I do. But if you hold on to that slide, just because I'll talk about PayPal just for a quick second. So if you think of PayPal, PayPal really just wants your money. They don't really care where you buy their product from. So it's another way if you start integrating that where um, and let's say PayPal makes deals with a certain consumer, or you have a product that you want to buy, whatever, Sony headphones. You go to PayPal. Let's assume that you're going to PayPal for search. Or even if you go to checkout or whatever, it might say like, hey, have you thought about this product that is closely related to the product that you want? And, we can give you a better deal or whatever. So there's some front end stuff that PayPal can do with search, or I'm sorry, that chat or OpenAI can do that can help PayPal with search related to products that ultimately they have deals with and all that good stuff. So there's that, but I think it's more going to be more on the business to business side,
Yep.
on being able to look through data that PayPal already has, data that already collects, to be able to predict who's going to actually be able to pay their bills, who won't be, what's all that sort of stuff. So I do think, you've been talking about this for, God, I don't know, months now, but we're just scratching the surface of how, I mean, we're seeing this with layoffs now, sadly, but we're seeing, we're scratching the surface on how businesses can take massive amounts of data. I mean, if you think about everything that we do on the internet, everything that we do in life or whatever is being tracked by somebody. But that takes a lot of time and processing power to figure out what to do with it. Now that time is being cut, in half or if not more. So um, we're seeing that with I mean, even just because John and I are outside of Detroit, so we're seeing that with automotive clients, or automotive groups taking AI and figuring out what parts of the vehicle you're having difficulty with, because every button now that you push in your car is hooked up to a computer. And so we're seeing, data starting to come in, and automotive companies are now using AI to say, hey, what part of the car isn't designed well, what part of the car people are having a hard time with, when people are pushing buttons, what are they pushing buttons in certain orders, are they looking away from their steering wheel, all that sort of stuff. So all of that's being processed, and I think and that's all sort of that behind the scenes, like OpenAI and ChatGPT is fun for consumers, but I think you're just now starting to see, which is why, as John has been talking about too for a long time, earnings are holding up this rally. This isn't, everyone talks about AI as a bubble, but again, we're seeing earnings, we're seeing correlations of how AI is actually helping earnings, helping revenue, helping increase revenue or decreasing costs. And so we haven't seen this like crazy PE ratios of a bubble. Is AI in a bubble? Sure. Are there going to be lots of losses in companies? Yeah, because you can't have like 1,000 AI companies all saying that they're going to do things, the best. So you're going to see some losses, but overall, I don't think we're, um, you know, anyway, that's my
No,
soapbox for that one.
I still think, and as I work this week on rebuilding the new version or the next version of the AI2 index on that we've released, one of the key areas that I'm really looking into and the types of companies that I am researching are service-based companies. These are companies that are uh, taking an expert position as artificial intelligence implementers. The the biggest difficulty that I think most large businesses will have is the implementation of artificial intelligence. Most I think companies are already committed to it. We wouldn't see the build out in everything from chips to data centers to connections, et cetera, if that weren't happening. But uh, the the stalling point for businesses is that implementation phase. So, uh, consulting businesses, software businesses, uh, it, a number of companies in that realm where I think they have significant revenue and earnings growth potential at least over the next 1 to 3 years. Because I can tell you, even trying to implement some things on our end, and we're just a small company, it can be frustrating, and it can be a challenge because you literally have to think differently to utilize artificial intelligence. It's it's like it's like explaining uh, what's a really it's like explaining how a television works to a 2 year old, right? They can figure out how to push the on button, but after that, they kind of stymied. And sometimes artificial intelligence, whether you're working with ChatGPT or any of the other variations of that, and there are multiples of those, uh, you have to explain all the way down to true minutia, and that's I think the stall and frustration point. But the companies that have expertise in translating um, action to artificial intelligence, those are the companies that I think have a really big revenue uh, building potential in the near future. And the other area that I'm starting to pay a little bit more attention to, as far as some publicly traded companies, is in the marketing space. This would be companies like CRM and Clavio, Intuit, and others, where they're even GoDaddy. There's another company that just got a massive infusion, but I don't think they're publicly traded, and I think it's called Tempo. But these are companies that essentially provide the web platforms for building everything from websites to entire marketing stacks. And what all of that does is speed up the product or service to market process, and that speed is the value and function of artificial intelligence. So those are companies that I like as having significant potential, um, but that's just a little itty bitty slice. I'm sorry I didn't have a slide for that one, but we'll get the transcript out or the notes out and cover it that way. Morning, Joe. Great to see you. So Jeff, do you have
Yeah, I just have a
slides?
couple of not slides. I have just a website I'm going to go through really quick, but not too much, I promise. Let
And
me
pre-market, our portfolio in the AI2 insiders looks to be opening somewhere plus 2% overall. Nice move higher on one of the stocks. We got a bunch of lousy entries on Monday, so it'll be nice to see a recovery, and should be pretty close to positive almost across the board. I think just one stock will still be lagging just a little bit, but pretty solid and strong opening ahead for the AI2 portfolio in November.
remember too, if we ever, anyone at Traders Reserve, John, me, John, whatever, Dave, if we ever give you an entry and the market's up 1% and you want to hold off a day to see, I mean, there wasn't really a pullback, but yeah, so, some of those time we did that for three stock. Entry was on Monday, and I was like, "Are you kidding me? Let's wait until the afternoon, because when the market gaps up 1%, it's not always the best time to buy, but we're still tracking it based on a Monday morning open." Anyways, if it wasn't, so John mentioned some big earnings announcements today, and some major players plus Fed announcement and whatever else. So if that wasn't the case, what I wanted to sort of draw your attention to is this is the data from yesterday. We actually had 1,200 companies in the New York Stock Exchange that actually dropped in value compared to 618 that advanced value, and actually 356. So we had more 5-day new lows yesterday than we had 5-day new highs. So that shows you, or at least shows me, that we had a great Monday. Tuesday was okay, but it was only a few companies that were pushing things up. So kind of similar to what John was showing with IWM not really having the rally. We have NASDAQ and some of these others holding the rally, but we also know that most of these indices are so concentrated in a handful of stocks that we're seeing a handful of stocks rising. But in fact, if you look yesterday, we had more falling and more making new 5-day lows. So again, if it wasn't for earnings and some of these other major news announcements, I would say, hey, this is a little bit time. We're still bullish. I'm not saying that. I'm just saying, this is
Look at the Nasdaq on
a
that.
little bit
Even
time
the
to
Nasdaq was 27% were new lows yesterday on the Nasdaq. So
right, right.
I mean,
So
yes, I think one of the arguments has to be for the moment that Mag 7 made mega cap stocks are probably driving or are driving this current iteration of the bull rally. The question will be whether or not events today, events in the near future, will flow down to the next layer or level of companies, your large cap, small, etc. Um, and
and
really,
I think they will. I
yeah,
think this is it. Like I said, if it wasn't for some of the announcements that are happening, which I do think will flow into the rest of the market, I would be concerned with these kinds of numbers. Not concerned, but I would say, hey, like, let's take it easy on buying so much, because we might see a little bit of a pullback. But I think earnings have been positive. They will continue to be positive, I think. So I'm not really as worried um, about that coming up. Let me just, I only have one or two more things. Um, so the other one I wanted to show you is the number of stocks within sectors above their 20-day moving average. This just, to me, again, if you're new, 'cause some people are new today, what we look at is the number of stocks trading above their 20-day moving average. And when you get these numbers into into the 80% range. So let's say consumer staple, or let's say 71%. So information technology, when 80% or more of the information technology sector are trading above their 20-day moving average, it's not a right away thing. It doesn't happen, and it may even take a week to sort of filter through. But this is the time where the run, for the most part, has already happened. There are going to be stocks within this sector that continue to trade above their 20-day moving average and continue to do well. But as a sector overall, when you start seeing these numbers in the 80% or higher, that's usually a time to start being a little bit cautious on that sector and look at some of the oversold sectors, which would be sectors trading with 20% or lower, trading above their 20-day moving average. That's when you start seeing some value stocks come into play. And you start seeing some bargain basement investing come through, and everything rotates in a naturally flowing market, all that good stuff. So the good thing is the S&P 500 is only 49% trading above 20-day moving average. So again, that's a little bit interesting because we never even got to 80%. If you've been tracking this, we moved higher, but didn't get to 80%. We're actually now starting to fall a little bit. So again, if it wasn't for some of those earnings that will help lift the market, this would be a little interesting to me, that as the market goes up on Monday, goes up on Tuesday, the number of stocks trading above 20-day moving average is actually decreasing a little bit. But we're not in an oversold, we're not in an overbought market either, with the S&P 500 squarely in the middle at 49%. So that means there's plenty of room. If we do see the bulls come through and take over the market, we have plenty of room to move higher. And even within information technology, where your big mega cap stocks are, we're not even overbought in that sector yet either. So very positive things. Speaking of positive things, let's look at some seasonal data, because it is the end of October, almost November. And you actually see, if this will load, there we go. November on the S&P 500 tends to outperform even October. So as much as October was a little rocky for us this year, November ends up with an average of a 3.8% gain. And you can see, not that I want to jinx this or anything, but we have been 2021 was the sort of different November that we've had. But other than that, it's been green, green, green really since 2011. So not saying there's a guarantee or anything, but when people say, oh, we're topping out at this market, maybe, but history says that earnings from the October timeframe tend to carry over and move the market higher in November. And if we can get the government to reopen, we're going through trade deals and refining trade deals already. So if we have good earnings, which it looks like we will continue to have good earnings, and that'll carry us through to the early part of November. And then if the government, if we can get that sort of settled, then I would say the bullishness continues. As John mentioned, if the Fed comes out and says quantitative tightening is over, I would look for anything related to Bitcoin, because that means I think the Fed will start printing money again. And if they start printing money again, I would definitely look for Bitcoin and gold as alternatives. So that is all I have.
Let's stay here for one second.
Yeah.
One thing for those of you who may be index fund investors, one of the best approaches for an S&P 500 index fund is to add your capital at the beginning of November rather than at the beginning of the calendar year. And the reason for that is what Jeff is showing you here, is the period from November to April tends to have the greatest aggregate of gains for starting capital. So in other words, you're buying at a low, not the low, but at a low, and you're getting the full breadth of the gains that tend to occur in the next 5 to 6 months, or the ongoing 5 to 6 months. The second point, I want to go back to my slides. Let me take over the share for a second. One thing I wanted to point out from yesterday, note the end of the day, far left side, the Dow, 3 candles down, NASDAQ, 3 candles down, S&P, 3 candles down. But then look at the Russell. Defended the 248.50 line, and then a green candlestick up at the close. So that gives me a little bit of another divergent point, but a solid defense of that 248.50 line in the Russell. I guess that would be in the IWM. Um, but at any rate, that was another shift where the profit taking took place in the major indices. Some of those profits rolled over in the last 15 minutes to the Russell. So again, we'll see how things transpire on that front. I think there were positive developments in the phone call between um, Trump and Xi Jinping. I think that's how it's pronounced. I don't know, something like that. So again, any further softening of trade war rhetoric between the U.S. and China, that will continue to have top of market positive momentum. So to Joe, to your question, um, this is largely being driven by tech. Some of that by tech earnings, some of that by the softening of trade war rhetoric. The upcoming, or whether there's a summit or a call or whatever it is between the U.S. and China. Any positive developments on that front, which decrease the impact of tariffs, is will the initial push will take place in your mega caps, and then it will flow down from there. So I will tell you, in talking with my dad on the weekend, or after the weekend rather, he's nervous. Dad, he's like, why are stocks up here? How far can they go? And as it stands right now, I still think that the S&P 500 is aiming for this line, 7,200. So about another 4% higher. Could be better than that, but I do think that there's no question that the Wall Street is trying to push the market and push it rapidly. So the question is whether we can keep up. But let's see. I think those were all some. Oh, hey, from Brazil. All right, Mark. Welcome from Brazil. I hope you enjoy yourself down there. It's sunny here in Detroit, but it is not warm. I can guarantee you that. Outside of that, David, thanks for joining us. Everybody else, thanks for being here. We'll be back next Monday. We'll wrap up tech earnings, initial tech earnings for the week ahead next Monday. Any new developments in artificial intelligence, and get everybody on their week next week. You have your Millionaires Trading Club at 11 a.m., Income Masters at 12:30 today. A reminder, tomorrow at 4 p.m., happy hour with some big updates and dates for live events for 2026, including something pretty exciting that I'm looking forward to sharing with everybody. So other updates and changes that are taking place as well that will have positive impact for everybody. So don't forget to join us. It will be recorded, so if you can't make the 4 p.m., but I mean, come on, it's happy hour. Everybody can make happy hour. I mean, yeah, okay, we're not buying the drinks, but still, come on. Anyway, have a great day trading today. Hope everyone enjoys their Thanksgiving holiday. And again, for AI2 insiders, look for an adjustment alert coming out here somewhere in the next 5 or 10 minutes. We will have this recording up in about the same time frame, in about the next 5 to 10 minutes. So if you missed the beginning, you'll be able to circle back around and catch right up. Thanks for joining us. For Jeff, for myself, everyone else here at Traders Reserve, have a great week, and we'll see you next Monday.